anything political or rate or media, because they're usually wrong, it affects us probably in the most positive sense, only because they're spreading things that aren't going to happen. What are the odds of people getting out there and giving positive news? I feel bad for the consumers who watch that crap, but the majority do. And that helps us because now we come in as the authority and we're a guide with clarity. I always say to the community, when you hear that crap going on, the more and more you hear it, know that the sellers are listening to it, sadly. And now you got to step up with clarity. They want to follow clarity. They don't want to follow all this gray area that they hear on the news. It's just scaring the crap out of them. What they want to hear is you saying, okay, fine, but here's the direction you go. Here's the solution.
Welcome to the Evergreen Marketing Podcast by Carrot.com, where we help investors like you build businesses of freedom and impact by helping you generate more leads, close more deals. I'm your host, Carlos Zamora. Today, I have Chris Prefontaine, the founder and CEO of SmartRealEstateCoach.com, the host of Smart Real Estate Coach Podcast. He's a best-selling author of Real Estate on Your Terms. I have this one in my library here. Personally, The New Rules of Real Estate Investing. Chris, what do you know? What do you say?
Hey,
how you
buddy,
doing, man?
Good to see you again. I talked to Zach and I told him you and I chatted, and he's like, yeah, I think that was like 10 years ago that we connected with you. So it's been a while.
It's been a while, man. But dude, you're one of the OGs, definitely on the Mount Rushmore of creative finance, man. Tell us a little bit about your background. People hear the books, podcasts, everything about that. Tell us a little bit about yourself, man.
Yeah, so you aged me, but I'll age myself even more here. So I've been at this like 34 years. So that ranged from, I won't put everybody to sleep, but that ranged from, building houses literally on terms. I didn't know it. I was in my 20s doing that. And then buying a realty executives franchise, coaching people in Canada to be like, they're like $2 million gross commission earning realtors, not investors. And I was teaching them how to be more efficient with their life. And then that led to the crash, though. That's why I want to get to the kind of walk through the old stuff. The crash of 08, and for me, it lasted until 12, just mentally. I don't know when the crash technically ended, but it lasted for me till 12 because I was in my head for 4 years. And once I got out of that, sort of to your point about the new rules, I had to define what the heck I wanted to do. And that's how we got where we are today. So some of the definitions were, okay, well, let's not do transactions on a treadmill anymore. Let's not like do a deal to get paid, right? Very transactional. Like a job in hindsight. So I said, I don't want to do that anymore. Second, I don't want to sign with banks anymore. They're not going to have me by the you know what. And I don't care what their market does. I'm never going to worry about it. So these are just some things we put in place. And creative was the answer. Creative real estate was the answer. It's not like I invented it, right? Everybody knows it's been around since before banking, literally. But the fact is, it saved my butt. And it has turned into a thriving, we're in 80 markets helping students do deals. When I say helping, Kyle, you probably know, but we do deals with people and we rev share with them. So we're not about the 5,000 times a day you get hit on social saying, buy this course. We're about, can we do deals together, lock arms and revenue share and like have a true, about as close to a partnership as you can get. It's a consulting arrangement, but we do go into those deals with you. So it's a win-win. And that's changing the landscape, in my opinion, of real estate, not just creative real estate, where people can get in and actually get their teeth on a deal and then not be afraid because we're with them. So that's been the trek for a while. I can go back to any piece of that if you want to peel it back, but that's kind of where we are and how we got here.
I love it, man. We're going to hit on that. And quick tip before we get started on the episode, guys, because we're going to be talking about different deal types just outside of doing like a cash offer, the general 70% minus repairs, 70% ARV minus repairs minus your wholesale fee. So one quick tip, I would genuinely be not giving you guys full value here. If I didn't mention inside Carrot CRM, as soon as a lead comes in, you get hit property report. You get a full breakdown of their monthly mortgage payment. You can see the mortgage balance, what type of mortgages they have, if the house is free and clear. So a lot of stuff Chris talks about with the creative finance stuff is really, really helpful right in the CRM that you already have. So I want you guys to keep that in mind to see what makes sense, like a cash deal versus any of the creative finance deal that Chris has. And just to hit on that book, really quick, Chris, before we dive into it, I want to ask you about how to do these creative finance deals and what it means to you. The New Rules of Real Estate. So I started off wholesaling with Dan Schwartz right when I graduated college, end of 2013. And then we built Investor Fuse and launched that. Yeah. Chris was really one of the first times I heard of like creative finance, because the only thing that we were doing were cash deals, these cash offers to sellers in Baltimore. So I heard this and I was like, one, obviously you want to be the only people that last in this business are the ones that genuinely help sellers and try to figure out what they're doing. So it's really cool that you can help different situations sellers are going through. But two, guys, if you are serving these sellers genuinely, there's nothing wrong with getting paid 2-3 times on a deal like Chris does on some of these times. I was like, man, that's really cool. And you can also help sellers that are either free and clear, where there's equity, like in a wholesale deal, and some people that have a mortgage, and maybe even if they're out, if even if they're upside down. So for you, man, today, as far as deal structure, what does creative finance mean for you and your team? Like type of deals that you guys do?
Yeah, you hit upon some high points. I mean, owner financing specifically niche down to free and clear, I love, because think about it, and I'll do the opposite end of that in a minute. Think about it. If they're free and clear, presumably they would have pulled money out if they needed it. So they're usually okay financially. They're usually, quite frankly, pretty savvy. They didn't get there on accident. So they want their price. Okay, I'll pay anything for the property if I get the right term. Think about it. I'll facetiously say, look, pay $2 million. Give me dollar a month payments for 2 million years. And being facetious. Point is, I can pay whatever I want for the property as long as I get my term. So I love free and clear. And to make sure we say this, it doesn't matter what asset class. We teach single families to start because I want people to focus. But I bought my building that way, a mixed use building, did very, very, very well on it. I don't care. Planes, boats, people buy them all on owner financing. No. So that's the sell of the avatar that's like, hey, I'm well off. I just want my price. I have time, or for estate planning reasons, I want time, or tax reasons. Other side of the coin, second type of deal, subject to existing financing. There are people right now, sadly, that can't afford mortgages even if they have a 2 or 3% rate. I mean, things are on the rise as far as the trouble that's out there financially for people, right? Statistically. So we're grabbing properties, Kyle, at 2, 3, 4, 5% interest rates. You can't get that now. I don't know when you're going to get it again. So there's a very specific way to paper that deal legally. So I'm not an attorney, but just be careful and make sure you have the right attorney. And third is lease purchase. So those are the only three ways we buy. Lease purchase is the only one where you don't own it, you control it. You don't get the benefits of the depreciation and all that, but you control it. So those are three ways we buy. And that's what saved my butt coming out of the crash. And that's what to this day we do and only do. And I'll tell you, going into COVID is a good example. We had about, 76. I'm talking about just our family, not the community. 76 properties that we got buyers in, tenant buyers, we call them. I wasn't worried at all. Why? Because they're buyers. They're going to keep paying. They're buyers. They're not renters. We had 4 headaches out of 76. That's because the model brings forth buyers, not landlord headaches. So a little tidbit there for the exit.
I love it. Yeah, those times leading up to COVID, post COVID, I feel like that's when everybody's had their stretch. Just like my vision the last 10 years in the SaaS space, software space, serving real estate investors. The post COVID run seemed crazy as far as how many houses were being sold and stuff like that. Now it seems like it's slowing down a bit. The majority of this episode and conversation, I want to focus on what's the best opportunities between global economy, rates. I think they just mentioned this week, we're recording this like mid-December, that I think there's going to be a rate drop again, potentially before the year ends. So I want to cover like what you think of those 3 strategies: seller finance, hitting something that has an existing mortgage, sub 2, lease purchase. We can talk about exit too. We talk about how you're buying them, but we can talk about how you're monetizing those in different ways. But overall, what are you seeing as the best opportunities for 2026?
So let me say a few things generally first. So in 2026, if you're not in real estate, or you're dabbling in one of the niches, wholesale, fix and flip, whatever you're doing, in my opinion, biased, of course, I think you need to put yourself in a position to get really good in creative. Why? Because frankly, you won't care if the interest rates go up or down or stay the same. You won't care where you are geographically, and you won't care what price range you're in, because it doesn't matter. It's the ability to know that there's one constant in real estate, and it's going to constantly change, and you're okay with that. And then you go with that mindset in 26, and you speak with a seller, and you find out, is there a problem I'm trying to solve, or a goal that they're trying to accomplish that they can't in the market? And then you fit them to the owner financing, the subject to, or the lease purchase. It's strictly on them. Why? Because if I think of them all the time, if I just think of them, even if it's the least profitable for me, I'm always going to win. Because if I'm helping that seller, they'll tell 5 or 10 people, right? versus I'll have a student say to me, rightfully so, because they don't know when they're new, a community member go, well, I talked to this person and should I do one for, I said, I don't know what's best for them. They go, oh, okay, that's easy. Yeah, just do what's best for them. All three of those strategies are going to be good in any market. It's just a matter of what's best for them. Now, having said that, if you're in a market where you're not getting enough leads, then add things like, well, why don't I look for a list of all out of state, like absentee owners that are free and clear? That's a cool list. That's not a normal list. So you can hone into some of these if you want. And those are off market. I guess we should stress that, Carlo. Most of our stuff is off market. So it doesn't matter what the realtors are saying, what MLS is doing, it doesn't matter. I'm going to be talking to people that are off market primarily.
I love it. And that's a good hack there, guys, too. Absentee, free and clear.
I love it.
That's at least one sign of motivation if they're not even in the same state. And then two, you can actually do these, the seller finance deal, of course, that first one. So that's amazing. I love that. I'm going to clip up that part of, hey, when a student asks you or somebody comes to you, what type of deal should I do here? The seller's going to tell you. If you genuinely listen for their needs and you get educated on this, the seller's going to tell you what type of deal makes the most sense for them. So I love that, Chris.
Yeah, thank you. And let me say this for the new people, Carlo. Like when I started, even though I had 17 years before the crash under my belt, I was afraid because I brained it after the crash. I was afraid to take ownership. Believe it or not, my confidence wasn't there. So I was doing all lease purchase. And in hindsight, stupid because I missed all the accounting benefits and depreciation and all the other things that come forward with hold on to a deal. So just know that if you're a new person, there isn't a nice, easy, soft, fuzzy ramp, but you don't have to stay there all the time.
Mm-hmm. I'm thinking of two quick sales things too that come up for me, Chris. I'm a big fan of Never Split the Difference and Pitch Anything, some pretty popular sales books. And
I love it.
One thing psychologically is when you just give somebody options, if you're selling them on a service or pitching the service that you provide to them, and you give them multiple options, you're automatically increasing your conversion rate with whoever you're presenting that deal to.
Agreed.
So even just outside of the cash offer, even if you're not, and I want to talk a little bit about this because this is kind of something you just don't do overnight, or you watch a podcast and you're able to start pitching creative. So I want to make sure we have tangible steps for the listeners that haven't pitched these type of deals to sellers. But just when you present that seller multiple options, that's going to help you convert at a higher rate. And I'm a huge proponent of using your website as a sales enablement tool. So if you can add pages to your Carrot site, guys, that talk about the people or the avatar that you help, maybe you have a page on there that talks about how you help people that are either landlords or they're absentee owners, essentially living out of state, but they have something free and clear. That's something that you can direct them to either out of your CRM or shoot them an email follow up. Hey, it was great chatting with you. I just want to send you a page on my site that talks about how we help out people just like you. If you're somebody like Chris and Zach at the highest level, you probably have like PDFs, ebooks of specific avatars or niches that you serve people. Like some people have like probate books and things like that they're able to sell and bring to the seller. So I want to bring up those two quick sales enablement tools for you guys too. The multiple options and leveraging your site as a sales enablement tool as well.
I love them. And you mentioned a few cool things like to be the authority in your marketplace, believe it or not, is not hard because most people aren't willing to do it. So if you have your Carrot site and you, in addition to that, maybe have a YouTube channel or maybe have a book, and your knee jerk is probably, I can't do a book. You can do a book. There's people that'll help you do a book and you're all of a sudden the authority. So I love what you said there.
I love it, man. Talk to me a little bit about one thing I wanted to hit on. And when we were prepping for this, I think it was more relevant. I haven't heard about it a lot lately, but how do things in just global economy and United States politics kind of impact real estate? There was talk of the 50-year mortgage a few weeks ago. Just crazy stuff going on. How does that impact where you're at? Are you mainly just focused on like rates that mortgages would have in 2026, or what type of things do you look for since you're in 80 plus markets and have all these students that you're doing deals with?
My wife will say every time something comes on the news to your question, how does that affect you? How does that affect you? I always say what I said earlier. I don't care. Like I'm aware of it. I want to be aware of it, but I'm not worried about it. But how does it, to your question? Like anything political or rate or media, because they're usually wrong, it affects us probably in the most positive sense, only because they're spreading things that aren't going to happen. Like, what are the odds of people getting out there and giving positive news? It doesn't get the ratings. So frankly, I feel bad for the consumers who watch that crap, but the majority do. And that helps us because now we come in as the authority and we're a guide with clarity. I always say to the community, when you hear that crap going on, the more and more you hear it, know that the sellers are listening to it, sadly. And now you got to step up with clarity. They want to follow clarity. They don't want to follow all this gray area that they're hearing on the news. It's just scaring the crap out of them. But they want to hear is you saying, okay, fine, but here's the direction you go. Here's the solution. So that's my broad answer on that. I hope that helps.
It does. It does. And I kind of tease you up because I know when you're doing creative deals and you can do seller finance deals, you might not be as reliant on the bank or lenders as other people may. So I was kind of teeing you up that one purposely. And the other thing is when you're talking with sellers, I think it's a good idea to just have an idea of what's going on because your avatar, these sellers most likely are paying attention to the news to a certain extent. So being able to speak to those things, overcome objections, I think is super helpful. But like you said, you can always frame it in a way that's beneficial for you and the seller still.
Yeah, I agree. Just general knowledge. Like I'll catch things on purpose on CNBC for that reason. Like the quarter rate change the other day. Like I don't want sellers to say that and me go, oh yeah, really? Like yeah, I want to be aware of this stuff.
I love it, man. I love it. And to clarify, are you guys doing your own direct to seller marketing too, or are you mainly just doing the rev share with the students spread out all across the country pretty much? AE
No,
markets
we
is
still
live.
do our stuff. Good question because it's so important in my opinion. If you're out there, all your listeners are probably in some shape, form, or fashion touching real estate. You should not be following someone that's teaching anything in any niche that's not out there in the field. It's just when I started, Kyle, back when you and I met, there were honestly probably 10 max, maybe 2 competitors that I knew of that actually mattered. The rest I didn't consider, but they were there. There's probably 200 now. We're in a mastermind with most of them. Like there's a lot. So I'm not poo-pooing any one of them. I'm just saying if they're out there not doing deals and you're following that, guess what? What was good a year ago, maybe even legally in a contract, changed. Like you're putting yourself at risk. So it's so important. So to answer your question, yes, we still do. I'm still on the phones. I just don't do it the capacity I was because I have VAs that then bring me the kind of the cream. But oh yeah, we still do it. Zach and I and Nick are in the trenches every week. So when we learn or we do a deal or we get a curveball, because there's always curveballs. I've got this is 34 and a quarter years and this curveballs. So we bring those to the community as a lesson learned or a coaching moment or something we talk about in the mastermind. That's like as current as you can get. Live seller calls as recent as this week. I posted some of my calls on Slack and I ask for their takeaways. Like it's current. You're not buying a course. You're like in the trenches with us because we are. So that's so important that you ask that in any niche.
You need that, man. And even if it's someone experienced, an experienced wholesaler, let's say, you really need someone to be with you pitching these type of deals, learning how to underwrite them. There's a lot of moving pieces, even to protect yourself like legally. And for me, I have a lot of conversations with all levels of experienced wholesalers and real estate investors, but I think a lot of the beginner ones or people getting into the space, something that really holds them back is just confidence, whether they realize it or not. Because I talk to people and it's even, let's stick to beginner wholesalers and they're kind of seeing like, oh man, like, can I do this? Can I get social proof? Can I close a deal or two? It's like, for me, the biggest thing is, dude, you need to have confidence on the phone with a seller. Anything outside of a cash deal for me seems a little bit complicated where you really got to know your stuff. So being able to have a community or a mentor, whatever, somebody that you can do these conversations or pitch these type of deals to is super, super important. So I love what you guys are doing over there. Obviously been a fan of you guys for a long time, but that seems to be the biggest thing that I see that holds people back or what people can improve on is the confidence with sellers on the phone.
It is the confidence and clarity because the opposite is true, right? They want to follow confidence and clarity, but they want to run from the opposite. If you're on the phone and you're queasy, you're not sure, you're not confident, you're hungry for a deal, they hear it and they're running the other way. Picture this. I just said this on a mastermind last night. Picture if you're in real estate, any capacity to your point, and the way we're set up, okay, here's your leads. We show you how to get them. Then we say, all right, come in our office. We'll call your leads for you. We'll call them. You listen. And if you had that in any niche, wholesaling, creative for us, do you think in 26, in the first quarter, you could probably crack your first 3 payday deal in our case or a wholesale deal for you? Okay. Yeah, of course you could because you have that on your back. And then we created, Kyle, I don't know if I told you this, we created the Creative Financing Real Estate Association. So this is like 9 years ago. So when they go through our academy, they're accredited or certified, depending on what level they're at, by the Creative Financing Real Estate Association. So if they don't have the conference and they tell a seller that, well, yeah, I'm getting a bunch of calls. Oh, really? Are they accredited with the Creative Financing Real Estate Association? Bingo. You just put yourself above everyone.
If you got a little badge for it too, you could add that on your website, not to cut you off there.
No, you spot on. That's what we do. They put it right on there. Instant credibility.
Amazing. Dude, the credibility is so huge with sellers. It's typically the biggest asset that they're selling in their life. Typically, they're in some type of distress situation, the property's in some type of distress situation, or both. It's just such a big thing establishing credibility, and it could be a challenge when you're newer. So it's huge to be able to have somebody in your pocket like that, get licensed. What was it? The Creative
Financing Real Estate Association,
Safria. Love that.
And look, you met Zach. Zach started with me in 15.
Yeah.
Okay? I think it was December of 15. No, January 15.
Mhm.
Anyway, Zach started like everybody else. Zach started doing he'd make a call, be in a panic, run to my office. Can you do the call? All he would do is gather. Now you come to our boot camp, he does every call live in front of 40 people and crushes the deals and has done 700, So you all can learn it. He did the same thing everyone else does. He learned it by us critiquing his calls and getting better and better and better. And now you can't throw something at him and he can't answer, right? Well, every one of you listening can do that.
I love it, man. I love it. I should have probably led with this, but do you have a quick example on the buy side for these 3 type of deals? Maybe some numbers just so people can get a visual of what each deal type looks like. The lease purchase, sub 2, seller finance.
Yeah, let's do the seller financing free and clear. And the reason I want to start with that time-wise is the reason we like those, Carlo, is we will do 99% of the time, especially if it's residential. We will do monthly payments to the seller. That's why I don't care what I pay. Principal only. This is key. No interest. So although you can find some rates out there of 2, 3, 4, 5% on the sub 2 deals, you can't find 0. You can find 0 in our deals because that's how we structure them. We might give them their price, but they're getting monthly principal payments. That's cool. So from a profitability standpoint, let's give a deal. We did an oceanfront home, just under $1 million, $950,000. I'll go quickly in the numbers. She was a broker. She couldn't get it sold. And there was a myriad of reasons. It was special circumstances. So we said, all right, listen, we'll give you $945. That's what she was asking. We'll pay you $2,500 a month, principal only. So please picture that. $30,000 a year coming down off of that loan. I don't care what the market does. You have a nice little recession hedge, if you will.
Mm-hmm.
And then we don't pay it. We have a buyer in there paying monthly something over that. So it's some serious equity pay down and equity creation in that. That's why I love the free and clear. On the lease purchase, it's a sandwich lease. You can't do these in Texas, but you're just in the middle. So you're tying up the property on a lease. You're going to go out and put a tenant buyer in that property, and you're going to collect the spread in the middle. But at the very end, what we call payday 3, you're also going to benefit from all that principal pay down. Now, is it going to be as strong as the owner financing all principal? No. Whatever the underlying mortgage is, whatever that principal is, whatever that rate is, that's going to accrue to your favor when you cash that out. So all 3 paydays, I'll give you an average metric. This has been 12 years now. The average paydays, East Coast to West Coast, 45 grand low to a high of 350 was the new record about a year and a half ago. Those are big paydays. So most people listening to this don't have to go out and do 50 deals this year to accomplish their goals, right?
Mm-hmm.
If they do 6 or 10, they're out of their job and they're set up for a decade, So they're big numbers on these deals. You just got to learn the skill set and get after it.
I love it. I seen a couple people that it was a seller that wasn't necessarily distressed, but due to the rates, they weren't able to really sell their house wasn't selling. They weren't distressed, but they wanted to maybe upgrade to a house.
Yeah.
And they were able to just seller finance their own house and pay off the mortgage. They didn't have a huge mortgage left on it. But that's even a good deal if you're a seller and want to upgrade your house and whatever can't get a good deal. You can make some cash flow every single month, pay your mortgage down while moving into a new house. So it's just interesting, these numbers.
If I sold my house right now, people ask me this a lot. I don't have a mortgage on it. I'd sell it owner financing. Why? I mean, this banks build these skyscrapers for a reason, guys. So yeah, I would do it.
I love it, man. I love it. Any best other general advice for 2026 before I got a couple hard hitting questions or anything that you want to hit on this episode, Chris, before I kind of hit the last few things to put a bow on this thing?
Yeah, because you said it's for year end. Let me say this. 3 simple steps, guys. I don't care what niche you're in. In fact, you could use this in a restaurant business. It doesn't matter but we're talking real estate today. Step 1, find a niche that you can get behind. Like we kind of alluded to at the beginning. There's different niches. They're all cool. Some are more predatory, some are more win-win. Whatever fits your taste. Find that, be passionate about it. 2, gets harder as you go ahead. Step 2, find someone in that niche. If you listen to our conversation, we talked about things like making sure people in the trenches, making sure they've been through, like I've been through a lot of economic, but also personal stuff. Well, that's cool because you're going to go through it. That's not a negative. You are going to go through curveballs. You want someone to say to you, here's where you go. Here's where you have to turn. So that's important, but it's also important to pick someone or a community where you morally and ethically and value-wise, you can get behind them. Meaning, Kyle, you and I both know people that have messed up marriages or messed up relationship with kids to get success in their life. I don't want that. So get behind something that you can really say, I want that, the whole picture. Third is the toughest part. Third is put the blinders on, because there are a lot of cool niches in shiny objects in real estate. They're all good. Put the blinders on for 3 to 7 years. I'm not saying it's going to take you 3 to 7 years to do a deal. I'm saying it's going to take 3 to 7 for you to feel like I created some serious wealth here and I'm set up for the next decade. Then you can delve and you can start tacking on different things. That'll be my best advice for 26.
I love that, man. I love that. Let me ask you something. Working with family members across multiple businesses, what's the best insight? Like you mentioned, I think I met Zach virtually probably 2015. So, 10-ish years.
Yeah.
What's kind of your best insight or key things that you've learned? Is that something you'd recommend people do? I hear both perspectives of, hey, keep business and family separate. Then someone like Brett Daniels, friend of the show, he hires, he works with his friends, family, everything like that. So you've been in it for a while, man. What's your insight on working with family members?
First of all, we do keep it separate. So if we're at home, it doesn't, unless it's positive, it doesn't come up. Okay. So everybody knows that as the rules. As far as having fun and growing it, like what better people to hang out with, right? So how do you do that? In a healthy way. We have mission, values, and purpose. So our values weren't created by me and say, this is what you do, Carlo. It was, hey, let's vote. What are the values of the company? And they've lived since 2017 when we started them. So why do I relate that to your question? Simple. If someone has to be hired or fired, if a student in our associate program has to be accepted, it has to go along with the values. Like I messaged our salesperson this morning and said, don't accept so-and-so. There's too many red flags. Like other coaching programs will accept everyone. No, they gotta fit. So when a decision comes forward, it's not family personality. Oh, Chris says, so we got to do it. No. Does it fit the values? Yes or no? And if it does, it's a go. If not, it's not personal. That's important. And everybody voted on that. It wasn't dictated.
I love it, man. Keep family time or non-business time separate than business time, and guiding principles and values to help make decisions, hires you let in, everything like that. I love it. I love it, man. All right, quick fire round. Some of this we covered a little bit, so we'll see if you can get creative here. So you did mention the absentee free and clear, just targeted list to hit up for these type of deals, especially the seller finance. Outside of that, what is your best marketing advice as far as strategy or tactic?
I won't go list then. I'll just go with how we find success. And that is have virtual assistants for low dollars, even the really good ones, be your first call. So you're talking to the cream. And I'm talking to all those people that spend, rightfully so, in some of the niches, lots of money on mailings. We don't, and we don't have to. We have very inexpensive ways for people to get on ramped. And that's good for people that, like me, I was broke. So that's what I had to do.
Amazing. What's a book that changed your life in a few words? And what was the biggest problem it helped you solve?
Oh God, there's so many. The Shoe Dog, the story about Nike. That there's so many lessons in there. It's ridiculous. I could point to a lot more, but just life lessons. So you go, oh, okay, it's normal to build a business. It's hard. It's not easy. I don't care what people tell you. That there's a lot of books that do that. That just came to mind.
Okay. Love it. What advice would you give to your younger self?
I think about this all the time. First of all, the 3 to 7 year thing is important because when I was young, it would be what's the next best, right? And the second thing is, especially now, there's someone out there that is exactly where you want to be. Just go ask them for help. They'll help you. There's so many people that don't reach out. They'll help you. Internet will help you find them.
I love it. I agree with that. I think it's surprising how many people that are, high quality life, high net worth, however you want to measure it, are genuinely happy to help other people.
Kyle, I say on a podcast sometimes, send me this. I will for free help you. I get like one request. I'm like, I just don't get it. Like, you want it or not? I just don't get it.
That's funny. Well, dude, this has been an awesome podcast. Like I said, one of the godfathers of creative finance for sure. One of the first people, I learned about it from, which is a cool full circle moment for us here. Where can people find you, man? You and Zach.
Yeah, I want to give you guys the free book as always, and it's not free, but put in $10 for shipping. It's free. We will ship it. We just need an address. Yep, free. Go to 3 Paydays, and that's the number 3. 3paydaysbooks.com/carrot. So it's simple. We know it came from you guys. We respect you guys. I want to make sure we feed the show. You can also get a free class. No one's breathing down your throat. I'm big on free if you haven't noticed, so that you can go explore the niches for no cost. Go to smartrealestatecoach.com/masters class. About 20, 30 minutes. You'll get a sense for what we do.
Love it, man. Guys, thank you so much for checking out this episode of Evergreen Marketing with Chris Prefontaine. If you guys enjoyed it and want to do Chris a solid as well, share this with them, any of your investor buddies that are doing types of deals or just want to hear some insight for the beginning of 2026. Share this, give Chris a follow. Definitely get the free book. It's not like a Russell Brunson you're paying $8 or $9 to get it shipped to you. It's free. So check that out. Always skill up, learn up, take things in a 3 to 7 year perspective in the real estate journey, and do it while you're genuinely serving other people, guys.